This is Alan Farley from FX Empire. Shopify is trading lower by about 7% after reporting another blowout quarter in Wednesday's pre-market. Looking back, the stock topped out right around the $600 level in February. Then it got hit by the big pandemic decline, settling about at 400, around the 400 level. Tested that level in April and then turned higher, exceeding the prior high very, very quickly and taking off in this very nice, healthy rally. Now, the trajectory of the rally eased right around July. We got a couple little minor new highs and settled into this broad consolidation pattern, finally breaking out once again in December. Now, we only got about 3 or 4 days of upside, and then the stock went into another sort of consolidation pattern, testing this new support down here around 1100. Now, in the weeks leading up to the release, it took off in this big vertical rally, finally topping out right near 1500. Now, it's gapped through this rising highs trend line after earnings, so that's a failure. At the same time, we have these lower lows right here, so we have this sort of expanding formation or megaphone. But I wouldn't really worry too much about the megaphone right now because we do have a series of higher lows in place to support the stock. So I don't think this is going to come into play, but it's something to keep in mind. Now, the stock is a little bit overbought, but not particularly overbought because it had all of this sideways action for a number of months. Now, as this pullback develops, I think we're going to get plenty of support in between 1200 and 1300. Perhaps we get down to the 50-day moving average in this support line here, but I don't think this is going to be a major trend change. The stock is just too strong and the growth is just too intense. So I think you probably can buy a pullback, probably down below about the 1250 level.